Yeah.
Hey, I think let's just step back for a minute and just look at what we're trying to achieve in very simple terms. Before I go, I'd like to touch on Elliott wave theory, but from a very basic perspective. But let's just backtrack a second. I'm going to think about this whole thing more as an investor and a longer term trader, because both of you are, and basically Craig and Graham as well, on their Bitcoin. So I'm not going to think about this thing tonight from my perspective, which is shorter term. Now, as a longer term buying shares, what do you, I mean, okay, what are you trying to do? You're trying to make money, but how do you end up making money?
We between Jared and myself, we've got different views about this.
I'm talking very basically now. Let's just talk about it generally.
Yeah, you see, with me, it's about buying something of value. Like a guy said to me yesterday on the golf course, he bought 1,000 rands worth of, I think it was MTN shares or MWeb shares or whatever. And today, and that turned, it became Naspers.
Yes.
And Naspers grew from his 1,000 rand investment, gave him 2.5 million rand at the end of the day.
All right.
He was just hell of a lucky to find that,
let's look
little
at it. All right.
Diamond.
But basically, you wanna buy a share, and in a certain period of time, the price must have gone up. So that
you want to.
I hope it does.
You want a return on your capital that will outstrip another asset class.
Yes, but very basically, you want to buy something at the right time, and then you can either keep it or you can take profit later on. But I think the important thing is here that whatever you want to buy, you need to be buying it at the right time. And I want to add something to that. I want to say that you want to buy it when the next move. We know that you guys have now seen a little bit of Elliott wave theory, and the Dow Jones, the Elliott wave theory actually comes from Dow Jones theory, which was formulated in the beginning of the 1900s. But the market moves in cycles. It doesn't just go up. And as an investor, you want to buy whatever you want to buy. You might do fundamental research, and your fundamental research might show you that you need to buy a specific share, or you need to buy into a specific sector, like we spoke about sector rotation. But the bottom line is you still want to buy it at the right time. And for me, the definition of the right time is when the next move in that cycle is most likely to the upside. Because if you're going to buy it at the wrong point in that cycle, the next move could be to the downside, even though the fundamentals are saying you should buy it. So it's all about interpreting the cycle and getting into whatever you want to buy at the right time. Do you guys want to comment on that?
Yeah, and yeah. It's getting the timing right or wrong. Let's look at Anglo. I bought it 56. It's sitting at sure, but what's it sitting at now? At 58. I bought a little bit. I just pumped up a little bit. So
yes, but you bought that very recently.
Yeah, recently. So do I, because it's treated me well, do I want to stick more money in there? I don't know, and maybe you can answer that.
But now that's why We have to look at charts. And when you look at charts, we have to start off with longer term charts. And
Yeah.
and Elliott wave theory helps you a lot to also see when the market is overbought.
Yeah.
Well, not only Elliott wave theory, there's other things as well. But if you're looking at the RSI, you're looking at trend lines, you're looking at channels, all those things are there to assist you to
Yeah. No, I agree with you.
to try and get your timing better. And there's a time, for example, in the market when you can't buy anything because everything is has
Too
just gone
expensive.
up too much. And I believe that's the situation currently in the market. If a year ago, if you'd done this technical analysis course a year ago, you would have looked at things very differently because you would have seen on the charts.
Sorry, I'm just gonna put in my earphones.
Okay. If you'd imagine for 1 minute you'd done this, you'd learn about charts and how to interpret charts and support lines and moving averages and all the things we look at a year ago. I think the picture would have been very different for each one of you, for anybody for that matter. And the clever guys were buying then. And the clever guys now are moving more and more into cash. Now, the charts show you that. That's the point I'm trying to get at here. Jared, are you agreeing with me or disagreeing, or am I talking Greek? What's your feeling?
No, I understand. I'm still sort of trying to get my head around how, you know, the fundamentals and the technical analysis can come together, so that one can have a clearer picture. But I mean, the move out of equities into cash, isn't that macroeconomics? I mean, that's a bigger play, and that's quite hard to see if you're seeing charts only on a particular stock.
Even if
What do you-
even if you wanted to buy sometime now, you can't just go out and buy something and just buy something. What you can do is you can go and look at a whole range of stocks, and if you can identify one of those stocks that has either done a correction or it's moved back onto a trend line or it's moved onto a support level, that you can look at buying. But
Yeah,
there's a lot of things at the moment you just can't. You can buy them, but you run the risk of this thing taking possibly even a 10% correction. And I'm not saying the correction is going to happen tomorrow. It might happen next week. It might happen only in a month's time. But you run the risk that that thing can do a 5%, 2%, 5%, 10% correction. Whereas, and then your money is into the markets already, and now you're running at a loss. Whereas if you can, as I said, it doesn't matter what you want to buy from a fundamental perspective, but if you look at the chart, it assists you. It gives you a better indication of whether you should get in right now or whether you should just possibly wait a bit.
yeah. I hear you. I think it also might just take a bit of practice, because I mean, I did apply some of those things, and I have seen some positive results in some equity shares and negative on other equity shares. So I think it also might just take some practice, you know, and also keeping that journal and then reflecting back and seeing stuff.
Okay. I just want to summarize basically what we've been doing over the last 3-4 weeks before we go into Elliott wave theory, and maybe we leave the Elliott wave theory for Thursday night when the other guys are with again. But to carry on, let me just get any chart here at the moment. Let me just get the S&P 500, for example. Let me just share that. So where are we? Okay. I'm just going to open up the,
Yeah, thanks.
oh, where's my share screen thing? Let me just find it now. Okay, there's share screen. Okay, you guys can see you can see the chart, eh?
Yeah.
This is the S&P 500. Let's just go into this is now on the daily time scale. Just forget about these vertical lines that I've put in here. So obviously so if you can take any chart, I'm just going to have this discussion. That could be any chart you're looking at. So obviously the first thing you're going to do with any chart, Jared, you should already have a good idea. What you got a chart like this. Let's even go on to the weekly. What's the first thing you're going to do?
You could draw in your channels, or you could draw in your resistance and support lines.
All right, let's just go first of all, and it's almost like you must have a checklist of what you're going to do. Remember, we want to enter when the stock is, whatever it is most likely the next move is to the upside. So we have to identify, we have to find support levels. Anybody can basically look at this chart at the moment. Let me just also, here's the RSI now at the bottom. You can see now I'm just trying to drag these pictures of us.
Are you going to stay on weekly?
With any chart, you should start on the weekly. You can even go to the monthly. It's always a good idea to start on the monthly, and on the monthly already draw in support levels and resistance levels. Like, for example, there would be a support level because, well, that's now a support level because it was a resistance level there. But monthly is quite long, actually. I prefer to start with weekly. So the first thing you're going to do is you're going to draw in horizontal support and resistance lines. Actually, the first thing you're going to do is you're going to make sure that on your chart you've got the 20, the 50, and the 200 exponential moving average. That's actually the first step. Okay, so in your charting software that you're going to use, those things are going to, you've already, in other words, programmed them in. I'm just having a look here. Some of these things have been switched off. I'm just going to switch them on again. Make sure they're on. You see, they're weekly and monthly. They must be turned on. And that one also it's on all time frames. Okay, so whatever charting platform you use, the 20, the 50, and the 200 should be standard in there, and your RSI indicator at the bottom should also be in there, standard. So when you open up any new instrument, when you look at a new equity share, when it opens up, those moving averages are already in there. So then so you're going to draw in horizontal support and resistances, and there's obviously support and resistances in here, but it'll actually be better to look at them on a daily time scale. But I can already see, for example, there's quite an important, the price came up to that level. There's also a very important support level. In here, I can see that there was quite a resistance level. The price rejected there. I'm just going to draw these in thin, and likewise, there was a support level there. But you can draw them in. They don't have to be major. Currently, right there now, I can see that that was a resistance level. That is now a support level. Right up there. Can you guys see that? Price came up there, it rejected it, and likewise, you can say that there is a support level over there. Okay. The next thing you're going to do is you're going to draw in trend lines. Now, on the weekly, on a chart like this, it's important that you also draw not only trend lines at the bottom, but also trend lines along the top. And very often when you draw a trend line in on the bottom, there's, for example, one that you can draw through there. In something like this, you'll actually just draw a channel. But you must also draw trend lines over the peaks. Like, for example, here. You draw a trend line over the peaks. Can you see how that price over there rejected that trend line? And then it actually went into a consolidation, and there's an ABC pattern in there. So, and if you go further back, but remember, the further back you go, it's a lot better to work in trading view and to get to work on a log scale on longer time frames, especially when you start looking at weekly and monthly. You'll most probably find that this trend line going through here on the log scale will most probably coincide pretty well with that bottom. But even here, even on this, look at that trend line and look how that found support, not only on that trend line, but also on this previous support level here. There's a support level there. It did go through it, but it didn't go through, it didn't go through it for a very long period of time. And also, if you bring this across, can you see that there? Can you see that that coincides pretty much with that top there as well? So, and this is the COVID spike. Remember, I'm looking now on a monthly time scale. This is a very long time scale. That's the COVID drop over there. But you can see how that came right onto that previous resistance level. And that's what guys do. They put in buy orders. Or they're watching the graphs and then they buy on those levels. But let's just go onto the weekly time frame. So that's very important to draw in those support and resistance levels and your longer term trend lines, because if this market's overcooked at the moment, you can see this RSI as well. Look at this massive divergence on the RSI. Okay. You can also see there was a divergence over there. That RSI was much lower than that one, which, remember, we're on a weekly now. But this market is overbought. So if this is going to drop, the reason we're drawing in these trend lines and these support levels, these are all support levels now because the price has gone through, is because we want to identify an area where it'll be a good idea to buy. So whether you're going to buy this actual index or whether you're going to buy some other share, by drawing in these trend lines, it's going to give you an indication when the price drops onto that trend line that it's worth buying. And a fundamental can't give you that kind of information, because you're not going to be the only one buying there. There's going to be fund managers and a lot of other investors also buying in that area. And at the end of the day, it almost becomes a self-fulfilling prophecy, because everybody is identified, everybody who looks at charts has identified that level. A lot of people are going to be buying there.
Probably a good time to sell.
So now,
hold cash.
Exactly. Remember, okay, I'm going to go into the daily time frame now.
What now? Sure.
Okay?
You're saying now is a good time to sell.
To sell. Yeah, you can't buy this index now, for example. Remember, you can trade the index as well. You can't buy this index now because the chances of you making money is much less than losing money. You got a much higher chance of losing money if you had to buy this now than your chance of making money, because it's gone too high up. So we want to identify a level where we can buy it, where the next move will be to the upside. The next most likely move will be to the upside and not the downside. What I'm saying is that here, the most likely move is to the downside and not the upside, because this market's gone too far. So to lower our risk, we want to wait. Remember, there's times they talk about you have to wait for the market to come to you. There's times when you got to sit on your hands. That's the time those are the times you're in cash. And you wait for the market to come to you. In other words, when it comes onto a support level, that's when you buy. Because then the most likely direction will be up and not down. At the moment, the most likely direction is down, not up. Jared, do you get it what I'm trying to get at? Do you understand what I'm trying to get at here?
Yeah. What are you?
Yeah.
Okay, I'm now on the daily time frame.
Can I ask a quick question?
Yep.
Do you track the Fed dates?
Sorry, say again. Sorry, do I track what?
The Fed, when they have their updates or earnings calls, or like
Yes, the Federal Reserve. The Federal Reserve is their meeting is once a month, and
the impact that has had, because I think, I don't know, I think what I in my mind's eye, I expected the index to go down. I haven't expected it to go up, considering all the news.
What news are you talking about?
Well, the communication on the interest rates, the market running high, the jobs figures.
You see that?
What I'm asking is if you do put those dates into your graphs to then see the impact, if that will affect.
Okay, I'm not putting the date in as such, but okay, that meeting happens once a month, and that's where there's a whole lot of guys that sit together, and then they discuss. They look at a whole lot of economic indicators. They look at jobs figures. The one they're looking at mostly at the moment is obviously CPI, for example. That's consumer price inflation. They're looking at PPI. That's slightly different. They're looking at the jobs figures. They're looking at inflation. They're trying to establish where the inflation has started kicking in, because when it does, they have to start increasing interest rates. Now they haven't started increasing interest rates yet, but when they start hinting at it is when the market will start reacting. So there's a difference between what they actually do and what they start hinting at, because the market will react on a hint. And by the time they actually do it, the market's already turned down. Now, so that meeting's once a month, and it was 2 weeks ago. And they release minutes, and then there's the press conference and all that kind of thing afterwards. Does it kind of like answer your, so the expectation, everybody that's listening to that at the moment, the interpretation is that the market is due for a correction. In other words, the minute they start hinting at not only increasing interest rates, but also tapering back on their monetary stimulus. There's a whole lot of different things they do to stimulate the market. Lowering of interest rates was just one of them. There's about 6 or 7 different things they do. They do bond
Yeah.
purchases they do, etc. The whole lot of things they do. So interest rate's only one of them. So the minute they start hinting at that they're going to start implementing monetary easing is when the stock exchange is going to take a breather and come down. I'm not saying it's going to crash, but it's going to have a correction, and that'll be the right time then to start buying again.
Okay. Yeah. Cool.
But once again, there's a lot of people, for example, that actually can't believe that the market is so high up. So you have to follow your technicals, and the technicals will show you when it's a good time to buy. Now, I'm just drawing in the most obvious trend line. There's a trend line there. Can you see there's also a trend line over the top of this? Jacques, you said you were battling trend lines. Can you see there's a, I've drawn
battling to sit down. I've been sitting the whole afternoon. My legs are caving in.
You see I've drawn a trend line.
Cramps.
You see I've drawn a trend line along the bottom here. Did that make sense to you? Eh?
So that bottom trend line, you're waiting for that to drop below it, because it will happen.
Well, for a start, if this price drops onto that trend line and also that moving average there, that's a buying opportunity again.
Yes.
Remember, I'm sitting on a daily time scale. If I go into a 4-hour time scale, that's down here.
Yeah.
Okay. No, so now remember, I'm not saying that this is the top in the market. This market could even go higher from here. But what I am saying is that you can't buy here, because this market might be sitting down here tomorrow. So if I wanted to do something here shorter term, I'll wait for the price to get here, and that's where I'll buy, because it's on a trend line and because it's on a moving
I'm
average.
happy with that.
You're with me on that?
Yeah.
And you can also see it coincides with the support level. So now that's where you buy, because when the price gets there, the most likely direction is to the upside. Yeah, right now, the most likely direction is to the downside.
Have you got the MSCI World? Let's have a look at that one.
Let me just finish this quickly, Jacques. Then we'll go there and have a look at a couple of things.
I think that's exactly the same.
I've drawn a trend line here. Can you also see that there's a trend line over the top here?
Yeah.
I haven't drawn it in yet.
Yeah.
Jared, you should be able to see it quite easily.
Yeah.
Which how many day trend line is it?
Yeah, I'll just draw it for you.
Okay. Yeah.
Okay, there. Now, remember when we spoke about patterns, we had reversal patterns and we had continuation patterns.
Yeah.
And a rising wedge or a falling wedge is quite a reliable pattern, but it also is a dangerous pattern, because when something starts going up in a wedge formation, it's dangerous. And likewise, this can be inverted. When you'll see when a price drops, sometimes when the price drops, it also starts making a wedge formation to the downside, and that means the price is going to reverse and it's going to turn up. So there's a trend line there, but now instead of drawing this trend line underneath there, it's always a good idea to draw a channel instead of a trend line. So a channel is just a double trend line. So there also, can you see? And I'm not necessarily going to go into that high there. I'm going to draw it where the prices sort of find resistance most of the time. So, and you can see here as well that this price is busy. Here it was running quite well in the channel, goes up to the channel. You can also see that it's starting to fall away from this channel, from this upper end. All right, so those are just basic trend and channel lines. On the shorter term, in here, I can also draw, if I go into the 4-hour, yeah, I'm now on the 4-hour. I can also draw in channel lines, and that I'm just showing you what I typically do. There, for example, is a channel that I've drawn in there. Can you see how the price, and can you see within this blue channel that I've just drawn, how this price broke up and it's come straight back in? Now that's very often that looks like a false breakout. It breaks out and it comes straight back into the channel. Here as well, when you've drawn a channel like that, you can now start drawing parallel trend lines inside this channel. So all I've done, I've drawn this red line parallel to that channel, and I can put it in there. Can you see how the price found support there and then broke? There found support there again, carried on. Inside here, obviously, there's a channel. Looking at what's recently happened, there's a channel in there. So now there's a support level there. Can you see it sitting on support at the moment?
Yeah.
And you see it's also coming onto that moving average. So it's coming onto a support level here, where I might, for example, buy now just for a bounce up here, because it might bounce up and then come down and break this level, but it might actually want to eventually get up to this area here. That might be where it's actually heading. So this is for me a low risk area to buy, because if I buy here and it bounces and it comes and it breaks this level, my risk is defined. I know I must get out, because then my interpretation of what I think is going to happen is wrong. So from as a day trader now, I trade the shorter cycles. That's typically where I'll buy. And then I'll wait and I'll see what happens here. And the nature of the way it comes off this level will give me an indication of what's possibly happening. You with me?
Yeah.
So
So
that's the
day
way.
trader will have a slightly different view than a long trader.
But the principles of
The
looking
long
at the
trader,
charts,
you'd want to look at these trend lines at the bottom, the moving average.
the principles are exactly the
The
same.
blue line, I don't know what moving average that would be.
As a longer term trader, this would be a very good area to buy. Remember where I
Yeah.
put this thumbs up, going back to the daily,
Yeah.
going back, that's on this
Yeah.
trend line here. And it's on that moving average. Because from here, from this level here, I can guarantee you it's going to bounce. Even if this is the top of the market. Let's assume this is the top and the price is not going to go past there for the next month or two. What I can guarantee you, unless it's a black swan event and unless it's something major, Iran war, or Iraq war, or whatever you want to call it, but I can guarantee you when the price gets here, it's going to bounce first. So that's a good buy.
What's the chances it will get to your support level there?
I don't know. It all depends. Look, it's got to break that support first. Then it's got to break this support. There's a support level there. It's got to get through that. It's got to get through. It's got to get
your
through this
Elliott
kind of
wave analysis. Would you look at not a 4 hourly? You'd probably look at daily, surely.
4 hours
If you're
good
a
enough.
longer term trader.
4 hours good enough. I'm sitting on the 4 hour time scale here. What I do as a short term trader is I know that's the support level there. And then I'll start moving on to the hourly time scale. Okay, so this is now that hourly time scale. I've identified that area over there. Okay. And when it gets there, it's not there yet, but when it gets there you can see is that same play. I want to see how it reacts there, but I might just buy. And then because if I wait too long as well, it might bounce off this level, and then I'm almost chasing it. So I'll actually put in typically I'll put in a buy order there already. Buy limit. So they'll put in a buy level. So now my buy order's in, and I've identified that area for the reasons I gave you. The other thing I'll do, one of the other first things I'll do is also look at a fib level. And can you see that also coincides with the 23.6? That's the first fib level of significance. I just want to make sure that I've drawn that straight opposite that line there. So the principles I'm applying here is exactly the same, whether you're an investor, a long-term trader, an investor. This is the kind of thing you're going to do in any chart. So if from a fundamental perspective tomorrow, somebody tells you, or you read a report somewhere that X, Y, or Z share is a good idea to buy, this is what you have to go and do. Because I can also guarantee you, by the time you hear that it's a good deal, this price has already shot up. And because the guys who run the funds, they've known about that long before you know about it, and they're already taking profit. So I'm not saying write the share off, put it in your book, but go and identify a level when it comes onto that level where it will be a good buy.
Yeah.
Jared, you understand? You understand
Yeah.
my logic here?
Your fib of 61.8 coincides with your little thumbs up there.
You see that? That's very observant, and it coincides with its trend line.
Yeah.
So that would be an awesome buying opportunity over there. And as I say, this might not be the top of the market. The market might get down here, and it might go back up and make a new high. But I can guarantee you, if it gets up there, I'll be taking profit. But also, and this is now where Elliott wave theory comes in, is because Elliott wave theory, and we'll rather look at Elliott wave theory again on Thursday night, because Elliott wave theory and channels and the way that price behaves in channels and trend lines, all of that stuff works together at the end of the day. You mustn't see them in isolation, because they start confirming each other. Look, for example, this trend line here. You see this trend line, this channel I've drawn comes from way back, right? You see it I drew it in there. Can you see how far back it goes?
Yeah.
You see how it touched that channel line there, okay?
Yeah, 6 months ago.
No, this is, remember now I'm on the 4-hour time scale. This is the 21st of June.
Oh, okay.
It's not a long time ago. But look at that awesome buying spot there. And that also would be a fib ratio of this move from there. That'll be most probably 50% that it came back to. And if you go look on the daily there, if I zoom in, we're talking about this level here. Can you see that it also basically found support there at the 50-day moving average? All right. So there's a fib level there. There's a 50-day moving average going through there, and there's a channel line going through there. So to put it bluntly,
looking at your graph, if you look at that graph, there are these lows, all those lows. I can promise you, you're going to get another low.
You mean this price now?
Yeah, somewhere, maybe not in the next
maybe not
2 weeks or 3 weeks, but it's going to drop down.
The price doesn't just, unless it's a massive geopolitical event. The price is not just going to drop straight down move. It's going to.
Looking at an hourly thing. If you look at the daily one, look at the daily. I prefer the daily. If you look at the daily, that thing is going to move down.
Well, look at your RSI.
Could you apply the Elliott wave or the ABC or any of that to determine where we think it might be going?
Yes, absolutely, 100%. And that's why, I mean, in the last half an hour, we've only spoken about trend lines and channels and horizontal support and resistance levels. Moving averages as supports. That's the only thing we've spoken about. Now we start looking at Elliott wave theory, and Elliott wave theory says a correction happens in 3 waves.
Okay.
So now when that also coincides with a channel support or a trend line support or and a moving average support, and you have a three-legged correction, now you're getting, it's like a tick list. You go and tick these things off, or you must have, those are the standard things you do. Number 1, you're drawing your moving averages must be there as support levels. Number 2, you're drawing your trend lines. They act as support levels, your horizontal support levels. Then the next thing you do is you now go and look at the wave pattern. Sorry, even before you get there, Jared, the next thing you do is looking at patterns. You go and have a look at continuation patterns, and you have a look at reversal patterns. And we know now already that, for example, a head and shoulder or a double top is a reversal pattern. We know that at the bottom, if the price is corrected onto a level, at the bottom, we most likely look for a double bottom or a triple bottom or an inverse head and shoulders. That'll be at the bottom, showing you that the trend's reversing and it's going to go back up again. Okay. So that's where patterns come in. And likewise, there's lots of, sorry, I was going to switch this alarm off. My alarms sound like whales and owls. Because I got tired of the standard alarm driving me mad. So before we even get to Elliott wave theory, we're now on reversal patterns, and we're on continuation patterns. So once again, on the daily, look, for example, there, from an Elliott wave perspective, that was an ABC correction. A huge, beautiful ABC correction. Okay. A, B, C. And if you go looking here, you'll find your 5 waves that took you up there. But there's also other reasons why it reverses. Remember what we're trying to achieve. We're trying to identify a level where we're going to get into the market, where the next most likely move is to the upside. That's what we're trying to achieve. So now, getting back here, for example, there was an ABC correction also onto that trend line. Can you see this is not a 5-wave move? The little bit you know about Elliott wave theory and what I spoke about, if you guys watch those video clips, those video clips are only 10 minutes each. They talk about impulsive and wave patterns, and they talk about corrective wave patterns. And impulsive wave patterns happen in 5 waves, and corrective patterns happen in 3 waves. So here, for example, I can go and count 5 waves in here. There's, for example, a 1, 2. I can count 5 waves in here. There's a 1, 2, 3, 4, 5. Here's an ABC correction. It happens in 3 waves. Here's your next impulsive move up. There's a 1, 2. There's a 1, 2, 3, 4, 5. So there's a 1, 2, 3, 4, and it comes up to a 5. And what you'll also see very often is that in your 5th wave up, you'll get it. That is where you typically, on your momentum indicator, you get a divergence. And it kind of like makes sense, because this momentum indicator is looking at the price and the way the price is behaving relative to the way the price has behaving. And remember, from an Elliott wave perspective, the 1, 2, the 3, 4, and the 5, the 5th wave is normally the shortest. So because the 5th wave is shorter than the 3rd wave, it makes sense that this 5th wave is losing momentum, and that's typically where you get your divergences on your RSI. And when you see a divergence on your RSI, it's also confirming that from an Elliott wave perspective, you're in the final move, you're in the 5th wave. And after 5 waves up, you have to have a correction. Jared?
But what are you determining is a wave? Like, could you draw 5 waves in
Here,
there?
for example, is 5 waves. 1, 2, 3, 4, most probably 4, 5. Did you watch that movie on that YouTube clip on the Elliott wave theory?
No, sorry, I haven't had a chance.
Hey, Jacques, did you watch it?
No, sorry.
You guys missed the links are in the group. Those 2 videos are very short. They're 10 minutes each. You've got to go and watch that first before we talk about it. But very basically, an Elliott wave move is a 1, 2, 3, 4 is normally a triangle, and then you get a 5th wave move up, and then you get a B, C correction. So this is your first leg up. So that's 1. Oh, that's a very big 1. Let me just make that a bit smaller. I didn't do that. Anyway,
Doesn't matter.
so that's 1. That's 2. Then 3, 4, and 5 up there. And now this 5 wave structure, and then after a 5 wave structure, you always have a B, C correction. So you have a B correction. And then once the correction's finished, then the price can continue going up. And then it will make again 1, 2, 3, 4, 5. And then there'll be another correction over here. Okay. But that's the basics, the basis of any market. And you can go and look at Anglo, you can go and look at any share, and you're going to find these 5 wave moves and then a correction. Now this 5 wave move, this might take 3 years. It might take a year. But you can also find this might have taken a month or a week, because the point I'm trying to make here is that each one of these divides into 5 waves again. So here you're going to have a 1, 2, 3, 4, 5. Here you're going to have an A, B, C correction. Then you're going to have 1, 2, 3, 4, 5. Then you're going to have an A, B, C correction. Then you're going to have an ABC in here. Then you're going to have an ABC in here. And then you're going to have a 1, 2, 3, 4, 5. And then from the top, you're going to have 3 waves. You're going to have 3 waves. And normally the C ends up in 5 waves. And then you start all over again. 1, 2, 3, 4, 5. Now looking at it at this, let me just go and take that away now. So that's the basis, and please go and watch those video clips, because it explains it very nicely in 10 minutes.
Did you, Michelle?
So now if we look here, let me go on to the daily time frame. Once you understand Elliott wave theory, you'll start seeing in here, you'll start seeing your 5-wave moves and your corrections. Here, for example, this looks like a 1, 2, 3, 4, 5. Then there's the ABC, or this might be a 1, 2, 3, 4, 5 ABC. So this you can label as a 1. Okay, I'm not saying that this labeling is correct, because you'll have to go and spend some time figuring out exactly where the waves are. But in the beginning, it's not important to get to number the waves. That's very tricky and it takes time. But what is important is that you can identify impulsive structures and you can identify corrective structures. Because when a corrective structure is complete like that, or even like that, when a correction is finished, or there's a correction ABC, that's where you want to get in. So your corrective wave structure, together with a moving average, together with a trend line, together with a Fibonacci level, is going to show you where you can join the existing market. So if you weren't lucky enough to get in here, there's lots of places along here where you can get in.
Jock, if I had a look at this, you probably could see, there's a, from the 17th of Feb, there's a 1, a 2, a 3, a 4, and a 5.
From the 17th of February.
1, 2, 3.
You're talking here.
Yeah, that one there. That's a start of a 1, 2, 3.
You see,
4,
no.
5.
You see, now you're starting.
That's a 1, 2, ABC.
See, now you're putting your thinking cap on because you're 100% right. If I go look at this here now, I can clearly, not clearly, but I can start counting here. That can now be, that can be a 1, 2. Now we get, remember, within this 1 going up here, we're getting a 1, 2, 3, 4, 5. So now, let's say the correction was finished there. This could be a 1 already. So now this could be the 1 of the next leg up. Okay. That's why I'm saying that you're getting these wave structures you get on a long term. You can go look on a monthly time scale, weekly time scale. This is now on a weekly. Yep.
And if you use a different graph type.
What do you mean by different graph type?
So if you change to like a line graph,
you're still going to see them. I can switch this. I can, and sometimes you actually see them more clearly on a line graph.
Yeah.
Sometimes you actually see them more clearly on a line graph.
Yeah.
That's a very good point. You often see them a lot clearer. Can you see a 1, 2, 3, 4, 5? 1, 2. But it becomes tricky when you start trying to label it, and you can spend hours trying to do it. But the important thing is look here, for example, and you guys have got to watch those videos because there's certain rules that come into play now. It's a pity I erased that graph that I've drawn, but there's certain rules that we can look at next time. For example, I'll just do it here quickly again. Jared, how much time have you still got?
Yeah, no, I'm
you're right.
Got a bit of time.
What,
yeah, just
another half an hour or so. You're right.
Yeah.
If we go just very basically the rules, there'll be wave 1, 2, 3, 4, 5, and then we'll get a ABC correction. Okay. the way that you identify this, because remember, getting back to our discussion where we started this evening, is we want to identify an area where we can get in. So this typically, when it comes back onto wave 2, that's a fantastic place to get in, because also when you look at the rules, if wave 2, let me just go and mark this again. So that's now 1, 2, 3, 4, 5. So those are my 5 waves up. So wave 1. Now what would have happened here typically, I'm just drawing this in a very simplistic format here, but typically something would have happened here. You might have had a correction here down to that level, or it might have been impulsive down to that level, but this is where the trend turns and starts going up again. Like for example, here the price came down, and here the price turns and it starts going up again. Then you'll see 1, 2, 3, 4, 5. You can actually see this 1, 2, 3, 4, 5 quite clearly over here. Now, but the rules that help you identify whether you're in an impulsive mode or whether you're in a corrective mode, there's certain rules you need to look at. And the rules say that for this to be a leg 1, leg 2 mustn't go below the beginning of 1. If this goes below there, then it's not a 1, 2.
Yeah.
Okay? So here, for example, if you look over here, the price goes up and it comes back down, then it breaks that. So this is not a 1, 2. Here, for example, here the price starts going up. You say 1, 2. Can you see that 2 level sitting above that level over there? So this could be a 1, 2, and now the price should carry on. But look, next minute it breaks that level. So now you know that this is not a 1, 2. It's something else. And as it turns out here, this is a correction. Once again, onto a moving average. So now the rules just very basically tell you that if this correction down goes below the beginning of this start here, it can't be a wave 2. It's something else. Then normally wave 3 is the longest wave. Okay. You can see here, for example, 1, 2, 3. This can be a 3, 4, 5, or this can be a 3, 4, 5. So wave 3 is not necessarily the longest, but the rule says it can never be the shortest. So and very often wave 1 and wave 5 are similar in length. That length and that length is similar if this is the longest leg. But wave 3 can never be the shortest.
So if I understand, am I understanding that your buy opportunity is then possibly at a 4 if you're charting and using 11?
Yes, because
you want to wait for 4.
Remember what I said, you want to buy when your next move is most likely to the upside. So typically this happens, and this turns here on a 78.6 fib level. Wave 2 often comes back to 78.6 of this first move. But in here, you would have seen 5 waves as well. You would have seen a 1, 2, 3, 4, 5. So that's the first clue that this market's turning up, because this is an impulsive wave structure off the bottom here. You might even find a reversal pattern in here, like an inverse head and shoulder or a double bottom. Then this leg down here would have happened in 3 legs. It would have been a A, B, C. And in here there would have been a 1, 2, 3, 4, 5 pattern. So that's, and it only comes down to 78 or 50%, or sometimes if this is very bullish, it might only come back to 38% and carry on. But but those are the clues you're looking for. The impulsive wave structure, then a correction, then a corrective wave structure. So when you see a corrective wave structure, now this leg here is equal to that first leg down. In other words, this leg here isn't starting to become a lot longer than that first leg down, which also, remember, an ABC correction, that A, B, C, this C leg is normally equal to that first A leg. Okay. Another one of the rules, another one of the things to look at, which is showing you that this is a correction and it's not a new impulse to the downside.
But then, okay, if we just look at that 1 and 2 labeling there,
Yes.
if you don't mind, you don't know if it's if where you've drawn the bottom of 2 is the bottom of 2, right? So we're not 100% sure. What we're expecting, because it isn't as low as the start of the 1, we're expecting a correction.
You're expecting the trend to continue up.
Yeah, sorry, to continue up. So now you're at that position. Now you don't know what's going to happen. Now, are we going to wait until we see it pass the resistance level of the high of 1? If that we would draw in. So the high of 1, we wait for the bottom of 2 when it starts producing 3. Once it breaks through, once 3 breaks through 1, yes. Once that happens, do we then, can we also then?
All right, that's a very good question. And now this is where everything starts coming together. Is
5 minutes.
when, hey, 5 minutes.
5 minutes.
When, first of all, when a correction happens, like that correction over there, very often it'll come either onto a trend line or onto a channel support line. So, or moving average. So there's a very good chance that there'll be a moving average sitting close here as well, which is also going to help you. Plus the fact that this is on your three wave down. That's also going to show you. And then what you do is you buy here. You're also watching your fib level. You've also seen, remember that that's the impulsive structure. So you can wait for it to break there, but you can also get in here because it's giving you clues about where you can get in here. The other thing you can do is you can wait for it to break this trend line. There's going to be a trend line going through there.
Yeah, I'm with you.
And that you'll see everywhere. You can start drawing in trend lines. You see there. This correction here, you start drawing a trend line in there. Even, remember, I'm very zoomed in on the weekly time scale. You're going to look on the daily time scale. You'll see these a lot easier. Let's just go on to the daily.
Yeah.
You start looking at
Yeah, Mom.
yeah.
Yay! I wanted to watch this for a while.
You start looking at your moving averages, and you start looking at
Korean.
you draw a trend line over the top. The minute the client starts doing that again, you can even draw a channel in there, which will just be a double trend line. And then it breaks out of this channel or out of this trend line. That's your place there to buy.
Yeah.
Or you could buy there looking at that structure and looking at that structure. Am I answering your question to a certain degree?
Yes,
Now,
thank you.
Talk, if you identify that you think it's going to drop down like we did here, let's go back to the future. I want to look at the future.
Okay.
Guessing what it's going to do.
Okay.
Now there, we said at the 67 is, well, you'll have to enlarge that somehow.
Okay, I'm gonna go on to the let me just put candles back on again. Let me just get rid of this.
We said not the daily, the. But if you look, that thing is going to drop down.
You want to look in here now.
It's going to drop down to the 4193 level, for argument's sake.
We're back on the 4 hour now. Remember,
Yeah.
You start your
Yeah, yeah.
analysis on the weekly
So
or the daily.
we had here the 4179,
You're talking about
4179.
this level here. Yeah,
Yeah.
well, there,
Call it
yeah, it's around about
4179 or
4,200.
4212.
Yes,
Can you put in a future buy
yes,
on a timeline, but it stays open till it gets there?
yes, absolutely. Any buy level you put in here will stay open. So the same way as I put a buy in there, I can go and right click here and I can say buy limit. And now it's put in a buy order there already.
Ah, okay.
Um,
Ah, there they are on the left. Yeah.
yeah, there it is, buy limit. But now, Jared, to get back to your, so, all right. So what we're doing is our trend lines acting as support, our channel lines are acting as support. Our moving averages, remember, you guys are investors, so you're looking for support levels where you can get in. And likewise, and we can, this is a different discussion, but also from Elliott Wave perspective, when the price goes up like this, it actually goes up to a Fibonacci projection level. And that also shows you where you must take profit. And once again, you're gonna see your divergences.
Yeah.
Now you notice, and you don't always get divergences, eh? Sometimes you don't. Here was a divergence over here for that high there. Here was a divergence.
Hmm.
So your
Yeah.
divergences
Yeah.
are going to help you. But here, for example, you see here that the divergence was eliminated. I'm just going to go. Here was a possible divergence here. Okay. Well, okay, there was a divergence over there. All right. And then the market corrected. But you would also have had a trend line in here like this, that for example. Can you see how clearly, look how this price, and especially when a trend line's got at least 3 touches and there it breaks the trend line. That's when you know whatever you bought, if you bought here somewhere, that's where you want to get out. But also you'll be bringing your stop loss level up higher. Same way, you guys can see there's a trend line going, yeah, we've broken now tonight, that we broke over there, and look how the price dropped. I forgot now what I wanted to tell you. All right, getting back to this level, yeah, it's not going to get there overnight. It might not even get here. It might only get here
It might turn at
and
the,
it might carry on further up. Because can you see in here there's a 5-wave move? So this could be, and I'll go zoom in then now. That could be 1, 2, 3, 4, 4, and we could still be missing our fifth leg up. So I'm just looking at this very quickly. I'm going to just zoom in onto this area. And we're also looking at it from this perspective. Here's a 1, 2. So now I must go and look, where's the 3, 4, 5 of this move? So this could be 1, 2, 3, 4. Can you see that this is runs horizontally? I haven't finished the rule. Your 3, 4 is normally a triangle and it runs sideways. Getting back to the 3, 4, and then the 5th, and that could be 5. So this could be 1, 2, 3, 4, 5. So that could be 1, 2. Now we got 1, 2. I'm just going to go in closer there. All right. There, that looks like 1, 2 over there. Here's an impulsive structure. 1, 2, 3, 4. Actually, it might be 3, 4, 5. That makes it 1, 2. Then we start going again. 1, 2, 3, 4. Remember, 3, 4 always runs sideways. 5. Here looks like a 1, 2, 3, 4, 5. Or there's a 1, 2, 3, 4 sideways. Here's again is a 1, 2, 3, 4, 5. But now the point I'm trying to make here is now, if this is a 3, 4, and we're still waiting for the fifth leg here, is that's another one of the rules, is that, let me just take this fib out, is that your 3, 4, your level 4 normally only comes back to 38% of this move. So if that's 1, 2, I'm going to measure off the bottom there. I'm going to measure up to that level. Okay. So the rule says 1, 2. It says that the third leg can never be the shortest. So here we've got a long leg, which is longer than this leg. 3, 4. And there could be a fifth leg up here, unless this is 1, 2, 3, 4. This 3, 4 could be sitting in here as well, this sideways. And here could be but this is not this can't be a 1, 2, 3, 4, 5, because you can see here, this third leg is too short. 1, 2, 3, 4, 5. It doesn't fit. So that's why you're going to look around. But the rule also says that 1, 2, that when the fourth leg down, before you get the fifth leg, should never pull back more than, it normally pulls back around about 38%. Can you see there, 38%? I'm measuring it. Actually measure it. That's that level over there, right? Is that there? Can you see at the moment, that's where 38% is sitting. So that could be a fourth wave there, and then up there again.
But it still feels like quite high risk to determine to make a call, because you're either going to make a call to buy now because you think it's going to go to the fifth leg, or you think that it's going to come under correction.
That's why all you can basically do is identify buy zones and buy there. And once you've bought, you have a look at what happens after this. And if this only goes up now in 3 waves and turns, it means that this correction is not finished.
Yeah.
Did you understand what I said there? If this, so this, it's not that simple. If it was that simple,
Yeah,
everybody would be a millionaire. But you have to look for clues, and your channels, your trend lines, your moving averages. Identify buy zones where you can buy, and once you've bought there, the most likely direction is that it should bounce or move up from that level, because it's a good area due to all those reasons where buyers should come in. All you can then do is look at the way the price behaves once you've bought there. Like I said, I'm going to repeat myself. If this goes up in 3 waves, 1, 2, 3, and the third leg is equal to the first leg, and it then turns, then it means that this correction is not over yet.
yeah.
But if it makes an impulsive move off here, like 5 waves up, and then it drops, and that where it drops to doesn't go below this level, then I know that this is gonna carry on, gonna make a 5th leg there possibly now.
But it might drop off.
That's
it might
drop.
But it might also drop.
It might drop. But that's why it's very important. And the whole time I'm saying that you want to buy where it's a low risk area. So you've identified.
My earphones are busy fricking.
Okay.
I don't know if you can hear me.
You're identifying a support level
Sorry.
where you can buy, and there's no guarantee that the price is not going to come and break that support level and carry on down. But it gives you an entry level.
Yeah,
And once you're in, you can put your stop loss close to your entry point because your entry point has been defined. There's
Yeah.
there's a reason for having bought. The minute you've got a reason
It's like
to buy,
Donna said, enough.
you also know where you're wrong.
good. Would it be okay if we stop there?
Yep.
Sorry, my earphones are busy dying.
All right.
The battery's
No,
popped.
we've actually gone through quite a bit. Yeah, let's stop there and then we carry on Thursday night. But I've covered a lot of, and everything we looked at tonight, it should start making a bit of sense about
Yeah,
what I'm trying to teach you guys.
We don't have any.
Hey, Jared?
yeah, thanks.
Okay.
Guys, yeah,
Okay.
appreciate it. Thank you.
Okay, we'll see you guys on Thursday night.
Okay, good stuff.
Okay.
All right, I'm
Okay,
gonna
Jacques.
run. Okay, cheers
Okay.
everyone. Bye.
Keep well.
Keep well.
Ciao, Jacques. Lekker rus.
Doc, my earphones are gone.
Okay. It's fine. But you should be able to hear my normal speaker.
My is broken.
All right. No,
Don't know what's wrong with my earphones.
we've covered quite a bit. So let's call it a day and then we'll carry on Thursday night. Shit, you know what? I never started my recording again. It's gonna drive me mad. All right. We'll talk on Thursday. Ciao. You're right.
I'm trying to phone you.
But why don't you listen on your laptop speakers?